Everyone. I hope you guys had a fantastic day today and a really good trading day. I have an exciting video. I know there's a lot going on the screen right now. I'll be able to go over all of that, so don't worry about it. But as always, I'm going to be going over the S&P 500 E-mini futures review for Thursday, September 4th. Before I get started, as always, the purple lines are the previous day high and the previous day low, and the orange lines are the pre-market high and pre-market low. Didn't really matter that much today, but thought I'd just let you guys know. And then one more thing, shout out to Troy H, my mentor, and if it wasn't for him, I wouldn't be trading. So huge shout out to him. I'm just going to go ahead and jump right into today. We had an overall bull trend day, so I think kind of going into the day, just a little bit of context. You see that there was a 6, 7 bar gap up, um, or just a push up at the end of the yesterday, creating a bunch of micro gaps. You have one, two, three, four, five micro gaps within there. So you kind of are thinking that we're maybe kind of in a bull trend, and the electronical hours, as you can see, were kind of stayed in the same general area as well. So it's been quite a while since we've been trading above the EMA for quite a lot of bars now. So you're thinking this might be kind of more leaning towards a bull trend day. But then let's go ahead and get into today. So we start off the day with kind of doji, but I noticed right about in bar 4 or 5 that it was a contracting triangle, as you can see through these green lines. So I knew that we were in breakout mode very quickly. Um, bar 7 was a massive shoot down. So like I said, we were in breakout mode. We had a breakout flag that happened at the bottom of the flag. It breaks out to the downside. I thought that I thought that this push was going to at least get a push down to the EMA. I thought that we were pretty far away. You can see from up here, we're about 12 points away from the EMA. So I thought selling the close of 7, definitely with this massive micro gap, was a pretty good trade. I sold the close of 7, expecting just a push to the EMA. I was just looking for about 5 points. Just touching the EMA, I wasn't sure if it was going to push through. I would have, assessed it then after it did that. So we get a good bar on 8, where I was up around 2, 3 points. And then unfortunately, bar 9, you can see it has that long wick. I got stopped out here because I was trying to have a very low risk, high reward trade, just because I knew the trend looking to the left wasn't the prettiest. My trade would have came true on 10. We touched the EMA, then a quick reversal. I think after you see the close of 10 with good IBS, basically a complete pullback failure, you could say, trying to go beneath the EMA, tries to touch the EMA. Everybody buys when it goes beneath the EMA. It's clear that we're still most likely in a bull channel or a bull trend. And I think it would have been a very smart, low risk trade to buy the close of 10. You could have definitely waited and bought the close of 11 as well. But I think buying the close of 10 was a really smart trade. And then you get, of course, this 11 rip up you would have already been up 5 to 6 points. Um, at its peak, if you stayed in, you would have made at least 15 points. But you can just see kind of a bear trap starting off the day. We have a breakout flag, breaks to the downside, but you got to be very aware of what the market's doing. You got to look to the left. It looks like we're kind of in a bull channel. We haven't went beneath the EMA. I think at this point it was about 15 bars, which basically means that we're in an always long scenario. So I think buying 10 was a really good trade. You could have scalped that up. I think you now know that this is a bull trend day. Definitely once you get into kind of more of the stuff up here, we go sideways, but there's no good pushes down. Every time it pushes down, you can see that there's about a move creating a new high, even though we're going kind of sideways. A good example of it right here is that I looked at was 21. You see we have this big push up. We're now been above the EMA for about 20 bars now. You get a finally kind of decent push down on 21, but everybody buys it up. Could have bought that and made about 9 points, creating a new high. Same sort of thing on 25 and 26. I actually took this trade. I took this trade as well. I bought 21 and then I also bought 26 because I just knew that it was a bear or a bull channel now, and there's been so many bars above the moving average that I thought it was just going to continue channeling up until it proved to me otherwise that it wasn't. So I bought that. It creates a new high there again. Sorry about that. A new high, kind of going sideways. You kind of think it may be losing steam. You can say that this is, one pullback, two, three, four, five, maybe even six pushes up. But like I said, I feel like we're in an always long position. And that's what I really thought when I saw bar 33 to 36. I thought this was a very valuable time to buy in. I thought it was at a very good discount. I thought it was the Bears kind of pump faking, definitely after seeing 37, 38, and a really clear indicator on 39 that this wasn't going to get a good close below the EMA. I bought here at the EMA when it crossed, thinking that this is the first time in a very long time since kind of the beginning of the day after all these great channel up that it's tested the EMA, it's probably going to reject it. So I made a quick 5 points there. At this point, I was kind of done for the day trading. I had other stuff I had to do, but you can kind of see the similar pattern the rest of the day. Every time you get a deep push down, it kind of creates a new high. You can see this 42 gets its first close below the EMA. After having 25, probably 30 bars above the moving average at this point, you could, I would say, for a very, very high probable fact that the first close below the EMA is going to get a heavy rejection, which you see 42 gets a good close beneath the EMA, and 43 right away rejects it going over that bar's distance, over 6 points. So you could have made about 9 points there. And then I thought it was just the same thing. You could just have bought basically every single bear bar. You could have bought 45, it would have ripped up for six. Could have bought 49, would have ripped up for eight. It's at this point you just know that we're in an always long bull channel. At this point, I think before 42, I think we're about uh, 40 candlesticks above the EMA, including yesterday. 42 was the first time crossing in that much time. There's going to be a bunch of rejections. So this almost just like kind of resets the channel. And you get three pushes up in here. You could have been buying the pullback of every single one. You see again, kind of goes sideways, gets pretty far away from the EMA on 53. So it's trying to kind of even out, go sideways for a little bit after these one, two, three pushes up. But once again, I feel like once you get anywhere close to the EMA, on 61 you could have bought. I thought, 62, 63 you could have bought. And then, of course, the channel continues. You get another massive push up of 10 points. You could have made 10 points there. You then could have bought. You then could have bought 72. Could have bought 73, pushed up for 5 points, and then towards the end of the day, you could have just continued to buy. You could have bought 72, bought 73, held over here, and bought 76, and then you would have gotten another massive, 14-point rip up to close the day off. So, um, tons of points on the tables today. You can basically just see kind of from a longer distance, just a complete bull channel the whole entire day. So today was just buy every single pullback. It was creating new highs all day. I think once you get, into that 25, 30, even 40 bars above, there should be no question in your mind that this is an always long, even once you're at 15 or 20 bars above the EMA. Looking at the 15-minute, you can kind of see more of the same. Kind of get that pump fake in the morning, but you could say it's just a pullback from yesterday. This is all one leg up. This pulls back. This is a second leg. Then it goes sideways. Then you get one, two, three pushes up, maybe a fourth at the end of the day. But just overall, a massive bull channel for the today. If you bought any bear bar at all today, you would have made money if you just held through some pushes down. But literally any bear bar of today at all, you would have made money. Even if you would have bought The only bear bar that closed below the EMA and just held it the rest of the day, you would have made 35 points at the close. So at least 30 points. If you're looking earlier this morning, if you would have bought, you looked at 10 through 14 as first leg, you looked at 15 as a pullback, and you just held this bar all the way up the whole entire day, you would have made over 40 points. Today's one of those days where you can just buy pullbacks all day, and it's hard to know in the moment, but once you realize that it's just a bull trend day and every pullback is getting a bar next to it that rips up to a new high, I think you can just buy any pullback pretty safely with pretty good risk management and just continue to scale in and make a killing. So I hope you guys did make a killing today. I hope you guys made a lot of money. Um, Please let me know if there's any questions, comments, concerns down below. I'll be posting again tomorrow, and I'll be back posting every single day next week. As I've said, this channel is going to be revamped, up and going. Before I sign off, huge shout out to my mentor, Troy H. And thank you guys for tuning in. I appreciate you guys watching, and please like, comment, subscribe. I'll be back again tomorrow with another video. Thank you.